Thank you for standing by, and welcome to the Limeade First Quarter Investor Conference Call. All participants are in a listen-only mode. There will be a presentation followed by a question and answer session. If you wish to ask a question, you'll need to press the star key followed by the number 1 on your telephone keypad. I'd now like to hand the conference over to Mr. Henry Albrecht, CEO. Please go ahead.
Thank you, operator. Limeade CEO Henry Albrecht here, presenting our cash flow results for the first quarter ended 31 March 2022. Joining me today is Limeade CFO Todd Sparks. Let's start with some highlights for the quarter. Overall, year-to-date net revenue retention, or NRR, was 100% for the quarter. We signed 60 new customer contracts in the quarter for 0.7 million of CAR. As investors appreciate, Q1 is typically a quiet period for new large enterprise contracts for Limeade, but we were successful in landing many new mid-market customers in the Limeade Advanced Listening space. Our Q1 2022 net cash receipts were $16.1 million, with operating cash outflows of $3.6 million and closing cash of $8.7 million. The Limeade Q1 2022 sales pipeline stood at $50.1 million, which includes $16.3 million in finalist and verbal stages, the last two stages of our sales cycle before contract signing. And we're pleased to reconfirm our FY22 financial guidance to the market. Turning now to a few highlights. In addition to the 60 new customer agreements for 0.7 million in CAR and the 100% net revenue retention as at 31 March 2022, cash and recurring subscription revenue from the existing customer base remained strong, with the top 20 enterprise customers on average having 17 months remaining on their contracts, down slightly from 20 months at Q4 2021. Limeade strengthened its leadership team across multiple business functions with the appointments of Dr. Patty Fletcher as Chief Marketing Officer, Andrew Jacobus as VP of the Limeade Institute, and Maria Rowcliffe as VP Chief of Staff to the CEO. These leaders are helping Limeade fulfill our mission, transform work into a source of positivity, energy, humanity, and purpose. The company's sales pipeline at Q1 2022 was $50.1 million, and $16.3 million in finalist and verbal stages, compared to the PCP Q1 2021 sales pipeline of $56 million, which had $11.2 million in finalist and verbal stages. On a sequential basis compared to Q4 2021, the overall sales pipeline was up 6%, and the finalist and verbal stages were up 11%. We remain excited by the quality and quantity of our pipeline emerging from the post-COVID era, where for over 2 years, enterprise budgets, specifically within the North American benefits buyers, have been more or less frozen. I will now turn the call over to Todd Sparks, our CFO, who will provide a brief summary of our quarterly cash flow information as released to the ASX this morning. Todd?
Thanks, Henry. During the quarter, the company recorded cash receipts from customers of $19.1 million, down 19% versus the prior corresponding period, or PCP, reflecting a delay in collecting 2 large customer invoices and a lower level of indirect channel billings and collections, which more than offset the contributions from the TinyPulse acquisition. Net cash receipts from customers after adjusting for payments made in relation to the sale of third-party products and services was $16.1 million, down 16% or 6% versus the prior corresponding period. Third-party payments of $3.1 million were down 52% versus the PCP and sequentially down 39% when compared to Q4 2021. Cash payments during the quarter were directed towards the following costs: staff, $12.1 million, administration and corporate, $4.1 million, operating, $0.9 million, marketing, $0.68 million, and research and development, $1.8 million. The 15% increase in quarterly staff costs versus the PCP reflects the additional headcount from the TinyPulse acquisition. The increase in R&D of 127% versus the PCP reflects the acquisition of the TinyPulse R&D Center of Excellence in Vietnam and temporary additional contract development investments during the quarter. The company recorded operating cash outflows of $3.6 million for the quarter versus $0.6 million in positive operating cash flows in Q1 2021. There was a timing effect as noted above that impacted collections with $2.3 million invoiced but not collected from 2 enterprise customers. Investing cash flows for the quarter were $1.7 million, an increase of 116% over the PCP, reflecting Limeade capitalized software development costs incurred for the consolidated company. Cash position was $8.7 million as at 31 March 2022 and no debt. I will remind investors the company maintains a $15 million undrawn credit facility with Comerica Bank. The company does not intend to draw on this facility in 2022 and remains focused on achieving positive cash flow in Q4 2023. Limeade is again pleased to reconfirm our guidance for FY 2022 as follows. Pro forma revenue of $55 to $58 million. Pro forma adjusted EBITDA loss of $6 to $8 million. And pro forma net loss after tax of $8 to $11 million. To remind investors, pro forma revenue includes the adjustment to TinyPulse deferred revenue, which was required as part of the purchase accounting under US GAAP. And pro forma adjusted EBITDA loss includes the deferred revenue adjustment and excludes stock-based compensation expense. Finally, the pro forma net loss after tax includes the deferred revenue adjustment. I will now turn the call back over to Henry for concluding remarks ahead of Q&A. Henry?
Thanks, Todd. I'd also like to remind all of our listeners today to read the release that we shared closely, some very thorough recounting of what we're going over today, including our described path to cash flow break-even in 2023 by year end. So in summary, Limeade leads the market with our immersive approach to employee well-being. We create healthy employee experience. 2022 looks very, very different from the last 2 years in a positive way. Our late-stage sales pipeline is strong. We're delivering valuable innovations to our customers, and we expect both a return to growth, organic growth in our core well-being market, as well as continued growth in our EX and advanced listening businesses. These positive factors, coupled with the operational discipline that we're exerting, keep us on our path to cash flow break-even by year-end 2023. We look forward to updating investors on our progress throughout the year. I would now like to hand it over to the operator for the question and answer session.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you're on a speakerphone, please pick up the handset to ask your question. We will pause momentarily to allow questions to register. Your first question comes from Josh Goodwill from Shaw and Partners. Please go ahead.
Morning, Henry and Todd, or afternoon. I think it is where you are. But my first question was just going to be on the payments. The invoices that were not collected in Q1. Have they been subsequently collected and converted to cash in the time since the quarter ended?
Hi, Josh. It's Todd. And yeah, absolutely. So, Josh, no, they haven't been collected as yet, but they're not very late, and we fully expect to collect them in the current quarter, the second quarter.
Okay, no worries. And just in terms of maybe some commentary around the pipeline, just noting there's no new enterprise customers signed during the quarter, maybe a bit of colour on what you're seeing going into the second quarter and how you're feeling about that finalist and verbal pipeline at this stage in Q2.
Yeah, I'll take that one. This is Henry. I would say, actually, we did close 2 larger deals in the first quarter, so it wasn't none, but it was primarily the deal count was in the mid-market listening space for us. I don't think I've been this excited about a pipeline in a long time. I would just say, we are a seasonal business. We tend to close most of our deals in Q3 and Q4, and we are on the calendar financial year. So, that's typical, but I think it's really strong growth we've seen in the sales pipeline, especially the later stages of the pipeline. Both the pipeline growth, quarter over quarter from Q4, but also year over year, a significantly larger later stage pipeline than we've seen in the past, and certainly not in 2021. And so I would say generally super optimistic, and we're showing up well as a company, and we will look forward to being in touch with announcements in the market throughout the course of the year.
Fantastic. And maybe just the last one, your net revenue retention figure was, much higher in the quarter. Could you maybe just, talk to some color around, how you've achieved that and what you're seeing on that net revenue retention front and around churn as well?
Yeah, I'd probably break it into a couple different pieces. The first would just be the market itself. Although there's certainly volatility in the tech markets around the world, and wars and other things going on, in general, the U.S. economy is quite strong. Unemployment is extremely low. There is economic growth that's quite strong in the U.S. So I would say our core market, the macro dynamics of it are very different than they were in 2020 and 2021. So that's probably the first thing. The second is we're continuing to execute on our product investments and getting our customers innovations that they see valuable. And whenever you can deliver value delivery vehicles through your technology, it helps with churn. And so yeah, we're positive about our Q1 result, and I think that helps us be confident in reiterating our commitment to the guidance we provided the market at the start of the year.
Brilliant. That's all from me. Thanks, Tim.
Thank you. Appreciate your questions.
Thank you. Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. There are no further phone questions at this time. I'll now hand back to Mr. Albrecht for closing remarks.
Thank you, operator, and thank you all. We look forward to catching up again at our annual general meeting in June, which will be held as a virtual meeting with our CDI holders as per last year. Thank you, and onward.
That does conclude our conference for today. Thank you for participating. You may now disconnect.